Today's business will mostly play around two things, like I said. One, accounting for normal routine transactions we stumble on from time to time while we work. Sale of goods, purchase of items from a vendor, payment for the item or receipt from customers. That's what we will majorly focus on today. So we'll be taking it little by little. So there will be a section for everyone to ask their questions. So we have something well structured. We don't want a situation where while I'm explaining, somebody is asking, another person is asking questions. So we'll create time for explanation. The idea is to break the whole knowledge area into chunks. And after each chunk, we ask our questions until the end of the course. It's supposed to run for 4 hours. We might be done before 4 hours. We might be done, most likely before 4 hours. And thank God there is no Premier League today. So nothing to distract our people here. So we'll start now. Remember, two things. We are focusing on accounting, double entry, to be specific, not accounting generally. And we'll also be talking briefly on some of the processes that create the figures you see in the financial statement. To start with, I would like to ask one or two questions to test the ground. To see the knowledge base of the people we have on ground before we go ahead. So my number one question will be, what are the elements of financial statements? Let's start from there. What are the elements of financial statements? If you wish to try out, you can just raise your hands. What are the elements of financial statement? Anyone wants to try out? Okay, Sean Prosper said asset, liability, equity, income, expenses. Does anybody agree with him? Is that not content, or is there a difference between element and content? Please feel free, raise your hands in the chat box and let's engage. So what is the difference between element and content? Now, I'm taking it from here because the end goal for us as accountants or as financial reporting people is to prepare financial reports. So I'm taking it from the end goal and we just bring it down gradually to where we are going. And I didn't prepare any slides. I just want us to be as practical as possible. So preliminarily, or introductorily, if that word exists, let's even start from what's the difference between element and content? Because I see a lot of folks mix those two up. What's the difference between the element of financial statement and the content of financial statement? So do we have anybody who wants to try out? Anyone on board that wants to try out? Everybody agrees with you. Does anybody want to speak? The difference between element and content. Does anyone want to speak? Okay. We are all shy. No problem. So here is my understanding. Okay, Udwak Francis has a hand up. Please, you have the mic, Udwak Francis.
Hi.
Yes, hi.
Hello.
I can hear you.
Okay. The elements of financial statements are what makes up financial statements.
Okay.
And these are profits or loss, and comprehensive income.
Okay, that's elements. So let me type it down. So let me type it down. Here is what you so you said elements are profit or loss. Okay.
Profit or loss account,
Okay.
balance sheet,
Balance sheet.
what else? Profit or loss account, balance sheet, um,
Okay. So we don't sweat it too much. Any other
that's all
person
I can
wants to?
remember.
All right, no problem. Any other person wants to try out the difference between elements and, any other person? Okay, Mary has her hands up. Mary. Mary, you have the floor. I've given you the mic.
Hello.
Yes, we can hear you.
Okay. I think elements of financial statement, I stand to be corrected.
Okay.
Are those divisions of the three statements? We have the fixed assets, we have the current assets,
Okay.
we have the current liability.
Okay.
We have the current liability. We have for the profit and loss now, which is the we have the revenue. Of course, we have our own, which is expenditure, which can be our OPEX or other cost of goods sold.
Okay.
Then for the balance sheet, we have our expenditures, can be capital expenditures.
Okay.
So for the content, I think basically maybe that for the current assets now, we have trade receivables, we have all those blah 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 under it. I think maybe basically those are the contents.
Okay.
For the I stand to be corrected. You just want to give it a try.
Yeah, feel free, no problem. Thanks for dropping your understanding. A lot of it will be corrected when correction is required and where correction is not required. Yeah, thank you for. All right, let me take one more response from Razak Olaleye. Then I can now step in.
Good afternoon, everybody.
Yes, good afternoon.
Morning. You are saying the morning.
Oh, you're in another country. Have you Japa?
No.
Okay, all right.
Own understanding. What I understand by elements of financial statement, they are, let's say, the income, the asset, the liability, and the expenses.
So you said income, assets, liabilities, and expenses, Abi?
Yes. And the component.
And the content.
The content are the financial statement of financial position.
Okay.
The profit and loss, profit or loss account, statement of equity, and cash flow. So I think those are the contents of financial statements.
All right. Yeah. Thank you very much, everyone, for attempting. Or let's just take one more person from the floor. Let's take one more person. Samuel. I see a name here, Samuel, just underneath Razak.
Hello.
Yes.
Good morning.
Good morning. We can hear you.
Yeah, well done.
Yeah.
I'm actually in transit, so I just quickly join you guys to at least to tap from your wealth of experience. So yes, the last person that responded also the element of financial statements, got it right. Following the guidelines of conceptual framework. So we have the income, we have the assets, we have the liability expense. The other thing that is not there is the equity.
All right.
So those should be 5. You have equity. So equity should be included.
All right.
Yeah. So for the content, yes, what is not there, note to the account should be there. statement of changes in equity.
Okay.
Yeah, I'm following what the other guy did. Yeah, statement of changes in equity. Note to the accounts. Yeah, and yeah, I think that's all. Yeah.
All right.
So
Thank you very much. Yep.
Statement of financial position, profit of loss, cash flow, statement of changes in equity, and note to the accounts.
All right. Thank you very much.
All right. Thanks, man.
Yeah. Yep. Okay. So it's time for me to speak. I purposely threw that question out because a lot of folks think it's just basic, but you'll be surprised the common pitfall we find in this question, or we see in this question. So let me create another sheet and be more specific. A couple of people actually spoke what I expected. Razak and Samuel, they spoke the correct thing. Thank you, Uduak and Mary, at least for attempting. So now we can learn. So first element. I would have liked to project, but I don't want to project. I'll just be typing on this Excel. And by project, I don't want to do any presentation. So elements, when a transaction happens, when an event happens, when a condition arises, what impact will it have on the business? That impact is referred to as element of financial statement. So I give a funny example. You are driving your beautiful car on the road, and there is a lady selling egg. She put egg on her head. But while you were driving, you were also pressing your phone. Because of that, you were distracted and you hit the lady. Thank God she was fine, but all the egg, like 15 crates of egg, everything on the floor. That is an event. So what do you think that event will cost for you as a human being? Let me even ask the floor. You as the driver, what do you think the effect of that event will be on you? Is it a jolly event? Will it bring more money to your bank account? And the answer is no. I don't know of anybody that will jam Eleni, egg seller, and be happy and be jumping and come out of the car and say, oh God, I thank you. Finally, this thing I've been looking for it. I jammed this person. Is a liability. It's not a good thing. It will create a liability. Somebody has mentioned it here. Another person said trouble. Well, trouble is not an element of financial statement. It is trouble, but trouble is... if you have opened any financial statement before and you saw trouble, please let me know. Share that financial statement. When you see a line item called trouble, that's fine. Just share it with me. I'm happy to engage with such financial statement. So it will create an expense on your neck. If your neck is not strong enough, they might beat the hell out of you right there. If you are driving a very yeye car, they will say this person doesn't have money, they can start slapping you there. But if you are driving a Mercedes Benz or a Lexus, oh, they will say, this person has money, please. They will even beg you that, please pay. So it will create an expense, it will create a liability, it will even create an outflow of money from your bank account. So you can see the names we are giving it. Those are elements. When events happen, when conditions erupt, when transactions happen, the name given to those transactions, the broad term is elements of financial statement. There are two categories of elements, two categories. We have the category relating to financial performance, and we have the category relating to financial position. Two broad categories: financial performance and financial position. For financial performance, we have income and expenses. For financial position, we have assets, liabilities, like the one you found yourself in when you jammed that lady selling egg, and equity. So sometimes some people will tell you that there are these five items, there are 5 elements of financial statement. They are not wrong. It's also correct. Some people will tell you that there are 2 broad categories. They are not wrong. But anybody who tells you there are 2 broad categories, probe further, ask them again. in each of those categories, which elements are inside. So for financial performance, we have income and expenses. For financial position, we have asset, liabilities, and equity. Now I'm starting here because we are talking about double entry. And double entry is the result of transactions that take place. So when a transaction happens, when an event happens, double entry will come into play. And double entry will then come to affect one or more, most times two, of these elements involved. So that's why they call it double entry anyway. So it's always good to start from the elements to say, okay, these are the elements. So when a transaction happens, the name we give to the effect, these are the names. Okay, how will double entry come in? That will then be the next conversation. So that's why it's good we have started from the elements of financial statements. So please, you know better now. Do not go into an interview and they ask you what are elements. Then you say egg, I jam egg seller. No. Or you mix up content with elements. That's a common pitfall. They are two, though related, but they are two different things. Remember, elements show the substantive effect of transactions, conditions, and events on a business. When an event happens, what is the impact it has on the business? The broad name given to it is element. On the other hand, we have content. Content. Every year, as accountants, we are expected, even every month, sometimes every quarter, depending on the nature of the business, we are expected to prepare financial reports. So we're expected to prepare financial reports. Most times we prepare monthly financial reports. Some people prepare annually, some quarterly. But by financial report now, I'm talking of financial statement. The content of financial statement is the next thing. While income, expenses, asset, liabilities, and equity can be found in the financial statement, when they say content, those are not really the content. Elements are the building blocks. What's built that financial statement? But content are then the different statements that you will find in the financial statement. They mentioned a few. I'll just arrange it. Number one is statement of financial position, previously referred to as balance sheet. And in a statement of financial position, we find assets, liabilities, equity. Number two, we have statement of profit or loss, another comprehensive income. Number three, we have statement of cash flows. Number four, we have statement of changes in equity. Number five, we have the notes to the financial statement. And we have comparative information. So when we are preparing 2023 financial statements, we are also showing them 2022 financial statements. So comparative information is the content of financial statements. The content you have here are the contents in accordance with IFRS. In each country, you have what they call company law or laws that guide financial reports. In Nigeria, the major law is CAMA, the Company and Allied Matters Act. So each country may now have a prescription of what to add to this IFRS compliant content or statements. They will now have what they refer to as other national disclosures, where we have stuff like statement of value added, 5-year financial summary. So these are the two popular national disclosures you will see. So take away on that content. When they ask you what are the contents, do well to explain to them that there is a content that is prescribed specifically by IFRS, and there is an additional content prescribed by the company law. In addition to what you have here, there's even what they call director's report. Well, that's for annual report anyway, but for the full-fledged financial statement, these two will do as other national disclosures. Let me see if I can download a financial statement online. Let's say Dangote Cement annual report for 2022. Let's download one. And we'll see it play out before we now proceed into treating transactions, debit and credit, and racking our brains. Sorry, my internet is not as fast as yours, but bear with me. For some of us who may have forgotten all these things, this is a quick refresher for you. You might not know that interview you want to step into on Wednesday. They will just serve into your hands, and this is what they'll be asking you. Then you will remember that Israel said elements and content are not the same. Israel said elements can be broken into two buckets. The one associated with financial performance, the one associated with financial position. Israel said that the one associated with financial performance can be broken into income and expenses. Israel also said the one associated with financial position can be broken into three: asset, liability, equity. No, you won't tell them that Israel said, though, not that you go and some people can copy and paste. They will even copy the name of the person they are dubbing from. They will ask you, what is the element? Israel said, no, that's not what I mean. No, tell them based on what you have learned here. Don't go and quote me. And you go and say Israel said, and you'll be saying the wrong thing again. So please, just focus on the learning. All right, the stuff is downloaded. Let's just wait for it to download. We'll come back to come and see how a full-fledged financial statement looks. Don't forget, I reiterate again, there is a difference technically between elements and content. Don't forget, don't forget, don't forget. All right. We have moved away from this elementary aspect. The next thing I want us to do, I will term this sheet elements versus content. Like I said, most people who join my sessions know I like doing a lot of presentations that always look fine. But today, I don't want to do presentation. I just want to be practical. I don't want to talk too much story. Now, the next thing, double entry in practice. We are still coming to connect what we will discuss under this double entry in practice to these elements and content. We are coming to connect them shortly. Well, somebody said any difference between content and component. Well, it's the same thing, content and component. But I've never heard of somebody say anything about component. The best I know about component is when you are saying a component financial statement, that means a subsidiary's financial statement within the group. So it's just best to stick to our content and element. Don't let us bring another nomenclature to it. The technical jargon we know as financial reporters is elements on one hand and contents on the other hand. So let's not sneak that component into it. Anyways, all these are just nomenclatures, theoretical discussions. So double entry in practice. Before we go into double entry in practice again, it's good to also refresh your mind on the accounting process, what they call accounting cycle in practice. Again, I will pause and I will pick the brain of some of our people here and let's hear from them. What do you understand by accounting cycle? Accounting cycle. What do you understand by accounting cycle? Anybody wants to try out from? Remember, feel free to say the wrong thing so that you will learn. Nobody will judge you. Anybody who is judging is already muted, so they can't talk. So feel free. Feel free to speak. If you also want to punch into the chat box, you are free. Yes, Mary has her hands up. Let's hear from Mary. What do you understand by accounting cycle?
Okay, I think it involves it from the start to the end of preparation of financial statement. What I mean is from the revenue, from the little transaction, from debit, credit, we buy bucket, 10 naira, we debit to credit, to the list, which is the financial reporting, with the notes to the account, another blah, blah, blah.
Great. Another word, another blah, blah, blah. Thank you very much. You have done well. You have an idea. Thank you. Sheung Prosper has his hands up. Thank you, Madam Mary.
Good afternoon.
Good afternoon. Good morning.
Yeah. Good morning. Oh, sorry. Good morning.
Yeah.
So after I was typing it, but I think it's not just. But let me just say it. The accounting type is basically like the earlier speaker said, from the beginning to the end. So first you have to.
Honestly, I can't hear you. You sound like you're in Sambisa, like you're fighting war. You know that walkie-talkie that soldiers always use.
I'm on my earpiece. What about now?
Oh, okay. Okay.
Can you hear me now?
Yeah, we can hear you.
Oh, okay. I said the cycle is basically, firstly you have to identify the transaction, then you record, you carry out your general journal, then you take it to the trial balance before you jump to your adjusted trial balance, and then you do your what is it called? You post them to the financial statements of financial position, and then after that you close the what's it called, accounting entry that like your revenue and expenses, and then I think that's basically the accounting thing.
Thank you very much. That summarizes it very well. And I see somebody also dumped it in the chat box quite briefly as well. I think Ife did. He said, or she said, I don't know he or she, or so I don't know if it's he or she. You know, nowadays we don't assume people's gender. So he said the person said financial transactions, ledger, journal, trial balance, financial reporting, quite concisely put. Mr. Bola Deshegun, account cycle is a series of steps that begins the moment of a transaction and culminates. Okay. Mr. Lawrence said it involves all the process leading to the generating. Yeah, I think the people here, yes, we know it. So that's what accounting cycle is. Mr. Sheung Prosper actually puts it in a, let's use what he has suggested to us. From transaction to the closing the books. FR is financial report, not for that, not for it. Financial reports, that's what I mean there. So we'll be looking at, if you look at this cycle, we can't cover all this cycle in 4 hours. That's the reason for the training we are starting next week. I'll be happy to see a lot of your faces next week during the training. So we'll be mostly talking about transactions, posting common transactions, and we'll be using Excel to create a trial balance. We might likely stop here in trial balance. Okay, let us proceed. Let's start with a transaction that has happened. Maybe a sale of goods or whatever the case. We'll go into that right away. So I'll stop my recording to give room for us to start picking it one by one. But before we do, please, do we have any questions?